in case of reconstitution, either in change in profit sharing ratio, in admission, retirement, death, this is our new concept. We have to study this. Okay, so in this chapter, we are going to understand what will be the accounting treatment of goodwill. Okay, so first of all, goodwill is a compensation. Do you know that? We are talking about goodwill here, and goodwill is treated as compensation. Okay, now maybe there is a question like, for what? Compensation for what? Okay, so in change in profit sharing ratio, one partner sacrifice, and one partner gain. Not one partner, some partner sacrifice and some partners gain. Let me correct it. Okay, so some partners are sacrificing and some partners are gaining here. So what do you think? If A, B, and C, there is three partners, their profit sharing ratio is 3:2:1, like we have done in our previous example. Here, you can see X, Y, Z were partner, their profit sharing ratio is 5:3:2, and Z is receiving 1/5 of X share. Okay, means 1/10 from X. Z is receiving this this profit share from X. So X is sacrificing his share for X, for Z, and Z is a gaining partner. So tell me, X will give his share for free? Ritika?
No.
No. Okay, Vanisha, what do you think? Not able to hear you. Your voice is not coming. Okay, no problem. Vanisha, actually your voice is not coming. So if you have any doubt or if you want to give the answer, you can write it in chat. Okay, so yes, X will not give it for free. Okay, he will take something from Z because he is sacrificing his profit share to Z. So he will take some money in form of compensation. That is called goodwill here. Okay, so that's why we will treat goodwill as compensation. Now, value of goodwill will be given in portion. Value of goodwill will be given. If it is not given, then you can also calculate it because we know how to calculate the goodwill. But generally, it is given in the portion. Okay. So if it is given, then how we will calculate the compensation amount, that amount payable by gaining partner to sacrificing partner. Yes, I think that's why your voice is not coming, Vanisha. No problem. You can write, if you have any question, you can write it in chat. So X will receive money from Z. We know the value of goodwill, and then we will multiply this value of goodwill. Actually, the goodwill of firm will be given. Generally, goodwill of firm will be given if goodwill share of partner will be given, then no problem. We can pass the journal entry with that amount. But if value of goodwill of firm is given, then we have to multiply it with gaining sacrificing ratio. Gain or sacrifice. So gain sacrifice of each partner. Maybe sometime one partner is not gaining or sacrificing. In that case, we have to multiply it with gain or sacrifice of remaining partner. So we will multiply value of goodwill of firm with gain or sacrifice of partners, and then we will pass journal entry for that. Okay. So the journal entry will be gaining partners capital account. Gaining partners capital debit. Sacrificing partners capital account. Okay, so this is our journal entry. You can see the concept here. I have written the steps. Calculate value of goodwill of firm. If it is given, then no need to calculate. The second is calculate gain or sacrifice of each partner. You know how to calculate gain or sacrifice because we have already discussed this in previous class. So gain or sacrifice. For calculation of sacrifice, you have to do old ratio minus new ratio. Or for calculation of gain, you have to do new ratio minus old ratio. Okay. So after calculating goodwill and gain or sacrifice of each partner, okay. Hello, Ryan.
Hello, sir.
Actually, you are a little late. So,
Sir, I
you were doing
joined. Sir, actually, I joined before, but due to network problem, it left automatically.
okay, no problem. So we are doing accounting treatment of goodwill. Okay, so these are the steps what we have to do. Calculate value of goodwill of firm, which we already know. Calculate gain or sacrifice of each partner, and then we will multiply the goodwill of firm with sacrifice or gain of each partner. After that, we'll pass journal entry. Journal entry is gaining partners capital account debit to sacrificing partners capital. If you want to write it, please write it down. After that, we will try to solve the question here. I'm sharing a question with you. Okay, so we're done writing.
Yes, sir.
Okay, so this is your question here. See, you able to see this? The question.
No, sir. Yes, sir. I can see that.
Okay. So this is our ocean. Okay. You can see the first ocean is A, B, and C. Is it clear to you,
Yes, sir.
the picture? Yes. Okay. So A, B, and C shared profit and losses in the ratio of 3:2:1. With effect from 1st April 2016, they agreed to share the profits equally. The goodwill of the firm was valued at 18,000 past necessary journal entries. As I told you, goodwill of firm is given in the motion. Okay, we don't have to calculate it. So goodwill is given. So first step was calculation of goodwill. The second step was, can you tell me?
So calculate gain or sacrifice of each part.
Yes, calculate gain and sacrifice of each part. So question number is question. Question number is 4. So now first we have to calculate sacrifice. It is our working note number 1. Sacrifice. Actually, the heading of working note will be calculation of gain or sacrifice. After that, we will write sacrifice equals to old ratio minus new ratio and all the partners A, B, and C. Their old profit share was 3:2:1. So 3/6, 2/6, 1/6. And their new ratio is equal because they decided with effect from 1st April 2016, they agreed to share profits equally. The goodwill of the firm was valued at 18,000 past necessary journal entries. Okay, so 3/6 minus 1/3 minus 1/3 minus 1/3. Okay, is this clear? How we have written the old ratio and new ratio? Do you have any doubt in this?
Yes, sir.
No, sir.
No, sir.
Okay. So 6. Here it will be 3 minus 2. 1/6. Here will be 6. It will be 2 minus 2. So it is actually 0. No gain, no sacrifice. 6. It will be 1 minus 2. Minus 1/6. So A is sacrificing and B is gaining part. Now both are same, so we have to multiply once only. So working note number 2, share in goodwill. Share in goodwill, both A and C. It will be 18,000 is goodwill of firm. It is given in the quotient. The firm goodwill of the firm was valued at 18,000. So we will multiply this 18,000 with their sacrifice and gain. 1/6. It is 3,000. Now we can pass journal entry. Journal entry is gaining partners capital account debit to sacrificing. So can you tell me what partner name will be debited and which partner name will be credited? Which partner
So-
name will, yes,
C's C gaining partner is C's capital account debit to A's capital account.
very good. So C capital account debit to A capital. $3,000 and $3,000. Now tell me, is there any doubt?
No, sir.
Nisha, Ryan? Okay, so this is your accounting treatment of goodwill. Now, goodwill, as I told you, is compensation for sacrificing. Okay, I told you that when a partner is sacrificing his profit share to some other partner, and that partner is obviously gaining partner, so he will give share of goodwill to sacrificing partner, and we will pass this journal entry. Okay, so now you are ready to solve a question. Okay. There is this question number 5, you can see. In this question, you have to calculate the value of goodwill also. Okay, so can you do this?
Yes, sir.
Ryan? Ryan, are you listening? Vanisha? Okay, please try. After that, if you have any doubt, then I will solve the question. Please try this. Okay, then actually you have to solve question number 5. Okay, they are already doing it. But wait, actually, you will be late. So I'll
Okay, sir.
try to explain this question to you. You understood the question number 4, where
Yes, sir.
so if you have not solved the question or you understood, please try question number 4. It is easy than question number 5. Okay, so please try question number 4. After that, we'll discuss the next question. Done?
Done, sir.
Okay. So you got the answer.
Yes, sir.
So first, Vanisha. Okay, so first we will calculate the average profit, obviously, because the profit of previous 5 years is given. First, we will calculate the average profit. It will be 90 lakh 2,25,000. And if we divide by 5, we will get 45,000. Yes, the average profit is 45,000, and we have to calculate the goodwill at 2 years purchase of the average profit. So 45,000 into 2, it will be 90,000. Okay, the gain and sacrifice we will calculate. And yes, so if you calculate the gain and sacrifice, what is gain and sacrifice of each partner? Can you tell me, Ritika?
Yes, sir. So the sacrifice of partner X is 5 by 30. Partner
5 by 30.
Y, yes, sir. Partner Y has a gain of minus 1 by 30. and partner Z has a gain of minus 4 by 30.
4 by 30. Yes, good. So we will multiply the goodwill value with this sacrifice or gain, and then debit Y by 3,000 and Z by 12,000, credit X by 15,000, because the X is sacrificing partner and Y and Z is gaining partner. So this is a simple question, but only calculation of goodwill is additional. Okay, now if you read question number 6, there is a existing goodwill. Goodwill appearing in the books is given. Okay, so we have to learn how to treat these type of goodwill. Okay, so question is X, Y, and Z are partners sharing profit and loss in the ratio of 5:3:2, decided to share future profit and loss equally with effect from 1st April 2016. So gaining sacrifice will be same as the previous question because the old ratio and new ratio is same. Okay, now on that date, the goodwill appeared in the books at 12,000, but it was revalued at 30,000. Past journal entries, assuming that no goodwill will appear in the books of account. Okay. Now, as we have already studied, goodwill is not recorded in the books until it is purchased. Okay, there is two types of goodwill: self-generated goodwill and purchased goodwill. We record only purchased goodwill in our books. Yes or no?
Yes, sir.
Okay, and what about self-generated goodwill? Why we don't record self-generated goodwill in our books? Do you know the answer? Why self-generated goodwill is not recorded in our books? You don't know the answer?
No, sir.
Actually, as per AS 26, intangible assets. Intangible assets are recorded only if the value can be calculated reliably. Okay. Yes. So if we can calculate the goodwill with certainty, okay, then we can only record that goodwill. But in case of self-generated goodwill, you don't know the actual value of goodwill because you have generated it by your actions. Okay, you don't know the value. You just estimate the value on the basis of that average profit method, super profit method, and capitalization method. Yes or no?
Yes, sir.
Yes, that's why we don't record self-generated goodwill because we have not paid any amount for it. Okay, so any asset is recorded only when it is some amount is paid for it and we know the value. But in case of goodwill, there is it we cannot certainly say that value is this. Okay, that's why we don't record the value of goodwill, self-generated goodwill. Now, if we don't record self-generated goodwill, then no problem, because the question is saying this to you already in this past journal entries, assuming that no goodwill will appear in the books of account. So there is an existing goodwill of 12,000 in the books, and we also valued our goodwill at 30,000. Okay, so the 12,000 goodwill, which is appearing in the books, is purchased goodwill. That's why it is appearing in the books. Self-generated goodwill cannot be recorded. So it is purchased goodwill. But now we have to write it off. what we do here, the existing goodwill or appearing goodwill, if there is any existing goodwill or goodwill appearing in the books, then we will write it off. Write off the existing goodwill in old profit sharing ratio. Please write this. The journal entry will be partners capital account debit to goodwill account. Existing, I have written only to remember this. Okay, so you don't have to write while solving the question. Partners capital account debit to goodwill account, and this will be written off in old ratio. So old ratio. Okay, please write it down. Please confirm after writing.
Done, sir.
Okay. So now let's solve the question. Okay, so you can see there is two question here, question number 6 and 7.
Yes, sir.
No. So in question number 6, there is an existing goodwill, and in question number 7, it is actually a little part of the question is not here. So we are solving question number 6. X, Y, Z are partners sharing profit and loss in the ratio 5:3:2. Decided to share future profit in equal ratio with effect from 1st April 2016. So first of all, we have to calculate gaining sacrificing ratio, question number 6. Working out number 1. Calculation of gain or sacrifice. Okay. So sacrifice equals to old ratio minus new ratio. Old ratio minus new ratio. There is 3 partners, A, B, and C. A old ratio was 5/10, 3/10, and 2/10. Minus 1/3, minus 1/3, and minus 1/3. So it will be same as the 15 minus 10, that is 5/30. 30, 9 minus 10, that is minus 1/30, and 30, 6 minus 10, that is minus 4/30. Okay. After this, there is 2 goodwill in the portion. First is valued existing goodwill, that is 12,000, and valued goodwill, that is 30,000. So we have to distribute these 2 goodwill between partners. Working note number 3. Existing goodwill. So can you tell me existing goodwill will be multiplied with old ratio, new ratio, or gaining sacrifice?
So old ratio.
Okay, yes, it is old ratio. So 12,000 into 5/10, 12,000 into 3/10, and 12,000 into 2/10. So it will be 2,400 here, 3,600 here, and 6,000 here. Now, working note number 3, share in goodwill. So share in goodwill, it is A, 30,000 into 5/30, B, 30,000 into 1/30, and C, 30,000 into 4/30. Okay, so 5,000, 1,000, and 4,000. Now here we will pass 2 journals. First, for writing of the goodwill, existing goodwill, it will be A capital account, debit, B capital account, debit, and C capital account. 2 goodwill account. This is existing goodwill. So 12,000, 6,000 for A, 3,600 for B, and 2,400 for C. Now, the second for valued goodwill. So in case of valued goodwill, actually what we do is gaining partners capital to sacrificing partners. So here in the sacrificing partner is A, and both of B and C is gaining partner. So B capital account, C capital account, to A capital. 30,000 multiplied by, so it is 5,000, 1,000 and 4,000. Okay, so B and C will pay 1,000 and 4,000 respectively to A, and we will write off the existing goodwill, that is 12,000. Okay, so do you have any doubt in this portion? Actually, we have to write narration also. So thing existing goodwill written off. And share in goodwill payable to A. This is your solution of question number 6. Now, do you have any question,
No, sir.
Vanisha? Question number. Okay, good. So question number 7, that is half the question actually. Yes, there are some other information also here. Okay, so 2 years profit in question number 7 is given 60,000 and 75,000. It was decided that no goodwill account will be opened in the books of firm, and necessary adjustment will be made through capital account, which on 31st March stood at 1,50,000 for A and 90,000 for B. So their capital balance is given, and previous 2 years profit is given in the portion. Okay, so what we have to A, B, and our partners in a firm sharing profit in the ratio of 2:1. They decided with effect from 1st April 2016 that they would share profit in the ratio of 3:2. So old ratio was 2:1, new ratio is 3:2. You can easily calculate the gain or sacrifice. But this decision was taken after the profit for the year 2016-17 amounted to 90,000 has been distributed in the old ratio. Okay, so first we have distributed the 90,000 profit for 2016-17. It is already distributed in old ratio. Now, value of firm's goodwill was estimated on the basis of aggregate of 2 years profit preceding the date decision became effective. Okay, so now in this portion, actually 3 years profit is given: 2014-15, 2015-16, and 2016-17, which is already distributed. Now tell me, which year's profit will be used for calculation of goodwill? Yes. Ritika.
So I'm not sure.
Oh, wait. Okay. So I was saying that their old profit sharing ratio is 2:1, new profit sharing ratio is 3:2, and the goodwill is to be calculated on the basis of previous 2-year profit. Okay, so question is which year we have to use, either 2014-15 and 15-16 or 15-16 and 16-17, because this line you can read at the end. Value of firm's goodwill was estimated on the basis of aggregate, means total of 2 years profit preceding the date decision became effective. Okay.
Yes, sir.
So which 2 years profit we have to take?
So 2014, 15, and 15, 16.
Yes, 14-15 and 15-16. Why we are not taking 2016-17?
So because they are mentioned preceding year before the decision became effective.
Yes, yes, we have to take the preceding year's profit, preceding 2 years profit. Okay, so that's why we will not take 2016-17 profit. We will use 14-15 and 15-16. Okay, so we can calculate the goodwill value by totaling these two amount. It is 60,000 and 75,000. It will be 135,000. Okay, and after that we will calculate, multiply it with gaining or sacrificing of each partner. So we will get our share in goodwill. So this can be solved. Yes. I will share this question as assignment. Okay, so please try to solve this. And yes, now there is two more concepts we have to study in this chapter. The first is accumulated profit, loss, or general reserve treatment. Okay, so we will discuss this in our next class. The second topic is a revaluation. Okay, and please try to remember all these concepts we are studying in this chapter, because these topics will be repeated in next chapter, that is admission of a new partner and retirement of the partner. Okay, these topics will be repeated. That's why you need to remember these concepts so that it will be easy for us to solve the portion of that chapter. Otherwise we have to do it again. Okay, is that clear?
Yes, sir.
Okay, now little bit information about the next topic actually. So can you tell me that general reserve is given as 1 lakh rupees? Okay, and there is two partners A and B. Their profit sharing ratio is 3:2, and this is old, and new ratio is equal, that is 1:1. Okay, Okay.
Yes, sir.
Now, general reserve should be distributed in which ratio? New, old, or gaining sacrifice?
So in the new ratio.
In the new ratio. Okay. So if we talk about general reserve, it is created in past, yes or no?
Yes, sir.
Yes. So we can say that it is past profit, old profit, yes or no?
Yes, sir.
So is this correct to distribute the past profit in new ratio?
No, sir. It would be
So
old ratio.
yes, it should be old ratio that we have to distribute our general reserve. So we will use old ratio for distribution of general reserve, accumulated profit or loss, because these are related to past year and our profit sharing ratio is changed at present at right now. Okay, so let's say if we take this example here, 2022-23. So it is 1st April and it is 31st March. Our profit sharing ratio changed on 1st January. Okay, and on this date there is general reserve of 1 lakh. Now, if on this date general reserve is available, it means it is created in past. It is related with previous or old times, you can say. So it should be distributed in old ratio, not in new ratio or gaining sacrificing ratio. But sometimes question asks you to not close this account. Do not close the general reserve account. Okay. So in that case, we will not close this account and then we will treat this as the goodwill concept. Okay. We will multiply this general reserve amount with gaining sacrificing ratio, and then we will pass the journal entry at the same gaining partners capital account debit to sacrificing partners capital. Okay, so we'll discuss these topic in detail in our next class. Okay, so do you have any doubt in today's topic or any previous topic?
No, sir.
Manisha? Okay, good. So, okay, so if there is no doubt, then that's all for today. We'll discuss our next concept in our next class. Please try to solve assignment and sharing it right now. Okay, so thank you. Bye bye.
Thank you, sir.